Hey guys, Useful Yields here. Today we're going to be going over the weekly portfolio update. Yep. As always, I like to start with the S&P 500 weekly performance chart, the heat map. So here you can see, it's kind of a mixed bag in terms of um, how the S&P 500 did this week. We can see here that technically it is down 0.07%. But yeah, if we take, oh, sorry, that was for the day. We can double check here. I think it was actually up for the week though. Yeah, 0.64. So, yeah, as you can see, healthcare, energy, some telecom services, some other stuff here, red, but you know, I think that you could say the majority is green. Maybe not actually. I think it's close to half and half. So, which I'll get into. That kind of makes sense. But yeah, I'm gonna be trying something a little bit different though. I've created a new spreadsheet just to keep things a lot cleaner. I know the other one worked, but it was just very messy. There's like 3 or 4 different places that I had to change my contribution. I had to like drag specific things every month to actually, or every day to update it. It's very messy, very annoying. But now I have this consolidated into 2 sheets where I have the S&P 500, all of our portfolio combined, and then each of the portfolios itself. So yeah, and then obviously on a daily basis, this is all the same data. We get the same numbers, which is nice. And yeah, and then with that stats page, I did follow that up with here, and I have that for both the SPY total portfolio and the Composer, M1 Finance, and Webull. And yeah, so let's start off with the weekly performance. Now, the nice thing is I can just come over here. So you can see for the 7 day, we have 0.3 for our portfolio, 0.3% versus 0.64% for the SPY, which kind of is unfortunate that we didn't beat SPY this week, but that's in large part due to the M1 Finance portfolio. You can see it's down 0.09%, which we'll take a look at individually in a second. You can see Composer was up about another 2% this week, which is very nice. Webull about 2%, but that's a whole joke. You can see for the 30 day on all of these, the SPY is at about 5%. Total portfolio is actually about 6%, so we are beating it there. We can see Composer is up 15%, which is probably why this is up so much, but 15% is crazy for a month. M1 Finance up 4.69%. And Webull is down 32%. So there's that. In terms of the totals, though, you can see here that these are the numbers. I will say that this Composer one is a little bit low, and the reason for that is because we've made a lot of changes. So you can see here on Composer, you can see our CAGR is actually negative, right? And our win percentage is quite low and all that. Now that's because that's when we first really started tracking everything. But if I come over here and go to June 20th, which is actually right around when we put in all of our different uh, strategies here, right? Was June 20th on Friday. This is what it looks like now. So you can see the total percentage here would be 15% because this just happens to be around a month. So it's, the same here. But that comes out with a 609 CAGR. And win percentage is nearly 80%. On our total portfolio, it is actually above 80%, which is crazy. So yeah, thought I'd point that out. Now, going, like obviously I know this is kind of a biased view, but at the same time, we did make quite a lot of changes to the Composer portfolio. So that is something to keep, to be mindful of. So I have also 2 charts to accompany this. Now this is really similar to what I had last time. I just actually changed the chart axes like ranges. So now they're actually a little bit more viewable. On our last one, it's pretty hard to see. I also have the dotted lines, which are the individual portfolios themselves. So you can see here's the Composer one here. starting to catch up quite a bit. And then Webull here, and then right here in the middle is M1 Finance. So it's nearly, sometimes it's on top of SPY, sometimes it's just down the middle, sometimes it's below it. I'd say on average it's probably closer to below it, which kind of sucks because, uh, the whole idea was to get more performance out of it, but I will actually go back on that point in a little bit. So yeah, and this is the drawdown chart. So um, that's just basically the amount of time essentially since the all-time high for that. So if we reached, like, let's say we were at 500 today, we went down to 450, and then we went down another 400, or sorry, went down another 50 to 400, and we went back up to like 550. So there'd be like 2 days in between there where you'd have a drawdown. So yeah, that is it. So right, let's get into the individual portfolios here. So to start out, we have Webull. This one is up $11.50. So it is what it is. There's not much more to say about this except glad it's up another $11. Bitcoin and strategy MSTR are just really kind of still kind of taking off, which is not something I was really expecting to be honest. And this is why I will never ever ever be investing in a leveraged ETF of a single stock again. As well as I probably won't even do just a single stock ever again in general. Um, except for like the M1 Finance portfolio, and that's just because it's grouped with the rest of its sector. So moving on to the M1 Finance portfolio, so we're around above 7%, or sorry, 17,000. I don't know where 7% came in. We can see here. If we come over here and we go down to each of the sectors here, semiconductors up 5%. The most growth there was from AMD, which, by the way, I believe is the highest percent or highest return holding that we have, and I'll go into that in a second as well. We have Nvidia and Broadcom around 4%. Then we have consumer staples. Largest one there is Pepsi. The other two actually lost. And then utilities, we have Nextra, NextEra Energy. We have Southern Company and Duke Energy Corporation. Largest one being NextEra. And in terms of the worst portfolios, we have energy. I believe there was some news from the presidency about energy. I could be wrong, but obviously ExxonMobil is taking quite a hit, 6.5%. Enphase Energy 5.5%, and Chevron 3.4%. Healthcare down as well. Large loser there is United Healthcare. Go figure. It's a company that I'm thinking about actually replacing in this portfolio because, again, I'll get into the holdings, but it's not really garnered a lot of growth. So, although I'm also considering waiting a little bit longer, maybe another quarter or something, just to say that I made a decent effort. But yeah, anyways, with the which one is this? Consumer discretionary, we have largest loss from Home Depot and also Costco, 2%. So yeah, getting into the holdings, which I said I was going to go over. If we look at the unrealized gain, we have AMD at 50%. Now, to kind of go over this, I believe the first time I technically started investing in this was like early March 10th or something like that. But it was pennies to the dollar because essentially we were still in YMAX, heavy YMAX, and so a lot of this was, it wasn't a lot of money. Not until I think, like I said, like May 19th or something around there is when we really started pouring everything into this. So we sold out of YMAX, we sold out of TQQQ, BTOL, in favor of this more balanced portfolio. So 50% though is kind of crazy, right? So unrealized gain of $250 almost. You can see the top three are actually semiconductors, so very good pick there from my side. We have Microsoft, Google, RTX, Morgan Stanley, Amazon, Honeywell. So yeah, in terms of the worst gainers, we have United Healthcare at 16% down. We have Enphase Energy, which is 10% down, which really does swing very often. So that's another one I'm considering leaving because, sometimes it's very good, sometimes it's very bad. What I might actually have to do is wait for it to jump back up, right? Have that really high volatile jump in the green, then sell it. But I don't know. That's just asking for a lot. Surprisingly, we have Procter and Gamble. Again, surprisingly, Costco and MasterCard and Home Depot. Some of these ones I really didn't see coming. But you can see the majority here are not red. So like we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 out of 30 assets are red. And some of those, worse than the others. Like these bottom three are really not even that bad. That could be changed in an entire day. But I mean, the amount of money that we have unrealized gain is quite significant, right? So 6.5%. So that's pretty cool to me. Obviously, you can consider this being worse than SPY. Again, just to reiterate, if we go from May 19th, we can see this is actually in this case it's not. So this is 5.5%. So that's pretty nice. But anyways, there's some other ones though we could probably have gotten, which is the largest contender for me was HHG. And if we go to May 19th here, we can see 7.5% or 7.2%, right? So there is some stuff that we could have probably chosen instead of doing these picks. But that's why we kind of played out, and then if a company doesn't really earn our respect or whatnot, we drop it and pick a better suited company, right? So that's kind of the strategy going forward. Last but not least, portfolio for Composer. So let me adjust the start date here to, let's see, I'll do this as the 20th, and I'll do this as the 13th. You can see here, our Simon's switcher went up 4%. We have Four Corners that went up 0.9%. We have QQQ, PSQ up 0.9%. And 3x beef here, 0.57%. I was really, really, really tempted to drop 3x beef here because it's just been really bad since we've been in it since June, which it's been a month, and it's down, kind of significant. Well, maybe not significantly. It's down about $20. Which, if we do the math real quick, is what, like 402 divided by 418. It's down about 3.8% or something like that. So, I'm obviously really pleased with the other three. We are up around close to $30 on this QQQ PSQ, and exactly $30 almost with Four Corners. In terms of dollar amount on Simon Switcher, we are up around $233 or something like that, which is very nice. In terms of the best gainer, obviously, if we go from June 20th, we can see here the best gainer. What it is the Simon Switcher at 27% up. We have Four Corners and QQQ PSQ at 7.37 and 8.72 respectively. So really nice there. 3xB Fearless is what I'm talking about. It's down 3.8%. So That's one I gotta keep looking into. And I do actually have the $500 cash here, so I could technically get out of that one and then go into something new. I don't know. It's something I have to decide tonight, whether or not I want to do that or just reinvest in all of the triple, these three. I'm not quite sure yet. I might just do these two with 250 each. I'm not quite sure. But yeah, 27% is pretty nice. And just a reminder how that kind of works out. It was around 15% total CAGR, or sorry, total return, cumulative return on this since June 20th, which is very good. It's very good. And in these two individually, 7.37 and 872, they would actually beat SPY almost 2 times over as well. So, yeah, something to keep in my mind. And I'm still not quite sure if I want to split, 1,000 into the M1 Finance portfolio and 1,000 of the Composer portfolio, because the Composer portfolio is still pretty risky. You can see, obviously just by that annualized volatility or the standard deviation, that is pretty significant, 20% compared to like 7 and 8. So I don't know. It's something I had to keep my mind open to because obviously if we're getting 15% returns on month over month, that would be very nice. According to the CAGR, could be up to 600%. Whether or not that's true, I don't know. But, that's a lot of money. So, potential money, that is. Obviously, CAGR, especially with only a month of data, doesn't really mean a whole lot. I could cherry pick like a very specific week that we did insane on, but um anyhow, I think that's kind of it for me. So in terms of potential changes over the weekend or going into the next week, before the next video I make, I I might drop 3x beefier, potentially, and I might drop some of these that are just significantly down. I probably won't. I'll probably wait for these two to go back up because they had pretty bad weeks this week, and then I'll probably sell them off and pick something better. United Healthcare obviously is just one of those companies that's obviously not really uh it's not very liked by a lot of people anymore because of the whole you know what I'm talking about. Um there's that, but also at the same time, the reason I got into this is because I thought, well, yeah, they're at their low, they're going to go higher. But, I think they had an earnings or something, or I don't know, man. So that is it for me. Oh, before I actually head out, let me see if I had any dividends. So 13th, yeah, we had two dividends. Or sorry, we had one dividend actually. We had a dividend from the O Realty Income Corporation, with the ticker just being O on that one. So 93 cents, which is nice. It's just free money. So not really, but you know what I mean. It's money. So, anyways, that is it for me, guys. And as always, I wish you guys a wealthy future.